Hey, Mike.
Hello, Michael. How you doing?
Good. So I'm here with Hard Money Mike himself.
Correct.
So
Yep.
because I have this opportunity, I'm going to ask, what are bridge loans? Because I know it's our topic today, but I
Yep.
truly have no idea. So we can just jump right into it.
So a bridge loan is just a short-term need for money until some other event happens. Like I sell a property, I refinance a property. There's so many uses that real estate investors use bridge loans for. Every day we come up with something new because people have a different scenario. What can we use money for and how can we make money? And bridge loans have the flexibility to do pretty much anything an investor needs.
Okay, so it's to get you from point A to point B. It's a temporary fix for something.
Yeah.
And there could be a lot of examples of that, right?
Yeah. Two of the biggest examples we have is we use them for usage loans. Usage loans are where people have too much debt on their personal credit cards. They need to pay them off to get a better score. We just did 3 of them last month where someone we paid off their credit cards with a bridge loan. So it's just a temporary loan. We put usage on it. We put some other names on it, but we paid off their credit cards. Their score went up. They were able to refinance with a DSCR, get their cash out, and pay off all their credit cards. So in that case, the bridge loan helped them get a loan because it raised their credit score.
Yeah, it's awesome. I remember since I've been working with you, you've talked about this a number of times, and I have never heard of that before.
It's amazing how many people it helps put in a better situation.
Imagine.
Because it either opens the door because the door was closed, or it gets them such a better rate that long-term, the benefits keep paying them off monthly. The other big use for bridge loans is when someone has a property, they're doing fix and flips, and they have a property that's listed for sale or about to be listed for sale, but they need their next project because this is what they do. They got to keep their crews working. They got to keep their business going. So as soon as one is done, they need to get into the next one. But all their equity, all their money is tied up into that first property. And they'll have the money when it sells, but they need some down payment or they need some money for the next property.
Gotcha.
So a bridge loan, what it could do is put a lien on the property you're selling to help you buy the next property so you can keep everything going. And then when that sells, the bridge loan is paid off and you already have your next project and you're going forward. So bridge loans, those are the two biggest uses that we see, but everyone has very unique things. We do 4 or 5 a month of finish a project loans.
So there's usage, and then there's fix and flip transition, essentially.
Yeah.
Right?
Good way to put it. Yeah.
Okay. Usage is helping to bump up the credit score quickly.
Yep.
So that you can get a better rate or qualify for a loan that you wouldn't have otherwise. And then the fix and flip, people want to get into their next house.
Keep it going.
Keep
Keep it going.
That momentum is really valuable.
Yep.
From what I understand. So keep
Keep your crews working, all that stuff.
Okay, and the way to do that is to have a bridge loan where you put a lien on that property and it hasn't sold yet, and then once it does, you can pay off that bridge loan.
Yep.
Okay, cool. So those are the first two. And then the next one was what?
Finish a project. So you're either doing a big pop top or you're scraping or a construction loan or just a regular fix and flips where they're 15, 20, maybe $100,000 short of finishing the projects. Maybe their escrow won't give them any more money until they hit a certain mark, or they just ran out of money. They're trying to fund it themselves. So we could come in like a second position, get the project finished so they could get it sold, refinanced, whatever it is. Once again, a short-term solution. This bridge loan is a short-term solution to get them to the next step so they could keep moving on. Properties stall when you stop paying your contractors or your laborers or something. Doesn't help anybody when you're paying taxes and insurance and you're still paying interest on that first mortgage too.
Gotcha. So this one is like finish a project. It's because they didn't have the budget totally figured out, or it just turned out that there were unexpected expenses, so they're not going to make it. They're a little bit short. So the finish a project loan is what it sounds like. Give you a bit, whatever boost you need. And that was a big range.
Yeah, we've done them from $11,000 to $180,000 to finish. Yeah,
to finish a project.
Different size projects.
Yeah, makes sense. So and is that loan based on like what you foresee the property is going to be worth? And that's why
the numbers have to work for us as a lender and for them. They still have to be able to make money. We can't come in and give them money and they're going to be short because they couldn't pay us off.
That's a lose-lose for them.
Yeah, exactly. So it is where a good project just stalled and just putting a little bit more money in will get it done, maybe get it sold or get it finished before, we always call it like here, the spring season is the biggest season for selling. You don't want to miss it, so you want to get your project done. You want to keep paying your contractors so they come into the next deal too. So it fixes a lot of issues with projects that are just sitting there kind of wearing on you.
Beautiful. Okay, so that's usage, fix and flip transition, then finish a project loan. Are there others?
We see people who use bridge loans just to buy a property because they got a great deal until they get the real finance. But like they have long-term finance, and they do like what they call a delayed purchase financing. So maybe they find a deal and either their finance is not getting done fast enough and they have a hard close date. So maybe next Friday they have to close. Their lender is saying we're not going to hit it, and they're going to lose if they don't. So we could come in, do a 2 or 3 month bridge loan until their financing gets done, or they just found a good deal. They want to take it down now and get permanent financing later. So it just secures a property until they can get their regular financing.
Okay. And how are you able to come in and do the financing so fast when the traditional financing is like, oh, we won't have it done before you need it?
Because, we're not looking for appraisals, and we're not looking where's your income and validating where all your money is coming from, sourcing all your money, where your income is in line or not in line.
Yeah.
Maybe it's something that they have to finish their taxes for 2023 to qualify, but just put in an extension and their accountant's saying it's going to be a month or two. We don't care about that. Traditional lenders will. So maybe they just need a bridge until they get their taxes done or they get another property sold so they can get some money. There's a lot of reasons that these things come up and a lot of reasons why people use bridge loans.
Okay, yeah. So are these DSCR loans then? Because it's based on whether or not that property is expected to cash flow? No, it's not.
DSCR are 30-year fix.
Okay.
Bridge loans are typically like to fill like a bridge over a little gap.
Uh-huh.
So it's usually 3 months to a year at the most.
Okay.
So it's just
super temporary loans.
Yep.
Yeah.
It's just something to get you from where you're at now to into a better spot. And that's the best way to put a bridge loan is it's here to get you into a better spot. It's not here to save a foreclosure. It's not here to save a deal that's already upside down because no one's going to win at that.
Okay, so not a DSCR loan. It's a 3 month to a year.
Correct.
Temporary. It's a bridge over a small gap.
Yep.
Okay. So are there other use cases for this?
There's so many. It's hard to even name them all. But a lot of people, if they have another property and they just want, they call it gap funding or down payment money. They could use the money like a bridge loan just to pay the down payment so they don't need a partner. Because there's some choices. You get to a point you either have too many properties going or you're just starting out and you don't have the money for the down. But if you have other properties, you could use those properties to bridge the down payment on another property instead of getting a partner. Because partners, typically all they're going to do is want 50 to 75% of it. It's better to pay a bridge loan for your down payment, or either you're buying a new rental property or a fix and flip. So over here you need 20 grand, and over here you have a property that has a lot of equity in it. Why not use a bridge loan to cover this money so you don't have to bring in someone else, and you could get that property closed, make all the money yourself?
And I'm guessing you're going to ask for a lot less than 50 to 75%.
Oh, yeah. Well, we could ask, but probably not going to happen. And another thing we're seeing more now, because it's getting harder to find land, is where people will buy a piece of property, like a house on an acre or something, and then split it in half or in multiple lots, and then want to sell the house. So traditional lenders, all those kind of things, are not going to allow you to use that whole property as collateral and then take part of it and sell it off and piecemeal it out. Typically, they want to be paid in full. With a bridge loan, we have the flexibility. It's like, okay, split it off, sell the house, and then we'll keep part of the lien. So there's just so much flexibility. Anything a investor could think of that's a good deal, because we see stuff that's pretty much not good deals. No one's going to make any money. Anything that's a good deal that there's some use and creative use for money that is short term, that's where bridge loans come in.
So a ton of versatility, a ton of flexibility. Yeah. If it's a good deal, if you run the numbers and it looks good, and it's something that you're wanting a quicker turnaround on, a bridge loan is the product for you, is what I'm hearing.
Yes. I would think the bridge loan is better in most cases when you have to close quick. The usage loan is probably the biggest thing right now, because credit scores matter when you're getting financing. And 70, 80% of our clients always are using a personal credit card. So that finish a project, because when a project just sits there and it's not going anywhere and you're trying to bootstrap it, meaning every month you have a little bit of extra money, you're putting it in it, and that's just killing you month after month because taxes and insurance and missing the markets and all that stuff. That's where bridge loans come in. Flexibility for investors when they're looking to fill that gap.
Well, if I'm watching this and I'm like, okay, I want to talk more about this, how do I reach out to you?
Well, you could reach out to us at mike@hardmoneymike.com, or just check out our website. We have a lot of good information, a lot of good tools there, hardmoneymike.com. I always subscribe, because this channel, that's what our whole goal is, to make sure we give you the information for the tools and the funding that is there. So subscribing to this could help you create the generational wealth.
All right. Hit that subscribe button. I don't know where YouTube has it, but it's somewhere around here.
Yeah.
Hit the subscribe button.
check it out, reach out to us with a deal. We can look at it really fast and see like, hey, this is something we can or can't do. And if not, a lot of the times we're like, we know who can do it.
Awesome. Well, good talking to you.
Yep. Thanks, Mike.